Welcome traders. Today's video will be more about, there's a lot of questions and curiosity about what is some analysis that you can use to make decisions on investments or ownership of underlyings, which means commodities, futures, securities, any type of equities. It can be crypto, whatever has buyers and sellers. There are mainly two types of analysis that you can perform. You can do technical analysis, which is what we're going to talk about today, which is charting, or you could do financial or fundamental analysis, which is looking at the underlying that's being traded to based on its finances or its financials. You would use as a basis to buy or sell. But one of the things to keep in mind when doing this analysis is, especially if we go the technical route, is understanding at the end of the day that technical analysis is the art of seeing a visual representation of price action between buyers and sellers. That's all it really is, right? So I'm going to use today, as you see here, this video is targeting around a application called TradingView. Their TradingView is great because it's cross-platform. It runs on all major operating systems. They have a really good mobile app, and they have a really powerful, fast browser site that does really good, fast, clean charts. So we're going to dive in. Now, when it comes to charting, one thing to look at, and this is the Windows desktop version, is, again, in your mind, just remember that all charting is a visual representation of price action, specifically historical, in the past, price action on the underlying that you're considering to trade. Now, the normal go-to for most people when you want to see your charts is candlesticks. And we'll dive more into it, but a candle, which can be a whole course in itself, consists of four things: an open, a close, and a high, and a low. Okay? And the candle can represent, based on volume, it can represent the candle either red or green. Green represents, for that period of time, the buyers overall ruled that duration, or sellers. And all it is what it means. And let's do a lot of candles so we can really see. Let's kind of zoom in here. But you see, for candles, you got green and you got red. But a green candle basically consists that the close was higher than the open. So anytime you have a candle, if at the beginning of the day, which is the open, which is the 9:30 a.m. when the market opens, all the way to the 4 p.m. close, that represents a candle. And if the close is higher than the open, it turns green. And vice versa. If the duration that you're looking at, that the close is lower than the open, it turns red. Okay? And then the high or low of the session will determine the body of the candle. Okay, but again, you don't have these candles. If you go up to in here to represent the price action, you can click and you could pick various things. You could do line view. You can do bars. So you have a bar. It peaks to the left and to the right based on open and close. You still get the color. Again, you can do line, which is basically just the line of action, which is, to me, not very visually appealing. And then you got what most people will leverage is the candles, because candles, like I said, in itself, um, candles are the go-to, right? They give you color, they give you candle wicks, and they give you the bodies. All right. Now, the other thing to understand from a chart, you have the X and the Y axis, and so the on the right side is on the axis is price. So all the way down from the lowest price, which could be zero, all the way up to the highest, represents the price action. And then the bottom, the left to the right, represents time. And you add those things together, you will end up with a representation of the price action since the beginning of whatever the product is that you're willing to trade or own. And then the next part that matters is, how do you represent a candle that represents two things? First, you have to say how much data of the underlying do you want to see. So you represent that first, and that's what these presets down here is. We have like, give me a day worth of data, 5 days, 1 minute, 3 minutes, year to date, 1 year, 5 year, and then all data of all time. So that's like a start date to end date range of data of price action. And then the other part that represents is, from that range, what do you want every candle to represent? Do you want it to be a 3 month, a 3 minute, 5 minute, a 1 hour, a 1 day? So if I click this button, I have data of all time for SPY, and every candle represents a month. Or I could say, show me a week, or show me a day, or show me 2 hours. And this will give you every candle will represent that much time. So if you really look, and when I say look, I mean for trading view at the very bottom, when you use your crosshairs, which is where it moves left and right, up and down, when you put your crosshair over a period of time, at the very bottom, if you look down here, will show the date and time. Well, depending, well, not really time so much, but definitely the date and time. And then across here will show the open, the high, the low, and the close. Okay, so if I say a month of data, you'll see every candle represents a month. So you look at the bottom, you see it says September 2nd, 1st, 2nd, 1st, then the month before. You see? And of course, there's no candles for days that the market's closed. So if you ever see how the market's closed, see, Tuesday, Friday, Tuesday, Monday, Thursday, Tuesday, and so forth and so on. Like if any of these days are closed because of the holidays, you got a month. Now this is a month, so this represents September, August, July, June, May. Versus I say per week, you see you got the 15th, and then 7 days, 8, 2nd. If I say day, you see you got 19th, 18th, 17th, 16th, so forth and so on. Okay, so what you want the data to represent. A month worth, week worth, whatever you want. And then down here is time. Like, show me the last 5 years. Show me the last year, that year to date, 6 month, 3 month, 1 month, 5 day. So a 5 day, show me every counts a day, would make more like sense. Like, I want to show me a daily chart for 5 days, right? And then per day, and that will show you, right? And you can zoom in and expand and do all sorts of things. And then you can move charts up and down. You can squeeze the time. You can stretch them out, bring it in, and then of course there's an auto adjust. Just by clicking this button, everything kind of snaps back to whatever you want, right? All time, however you want to do it. Expand it out, stretch it up. So you can make a chart be whatever you want, for whatever you want to look at. Okay? So, and then the other thing too, I want to make sure we talk about is you can draw on your chart. Now, this is where you can actually identify like key areas. And on a chart, the biggest thing I want you to understand in your mind is support and resistance. So think of like a resistance is like a ceiling, and then support is like the floor. So when you walk, you have support under your feet. Ceiling is like you can't go above it. Like you hit it and bounce off, right? So when you look at a chart, you see how it kind of moves up and down, back up and down, up and down, up and down, up and down. And when you get strong momentum or breakout, it shoots up and then pulls back and it goes up, and you can see how things move. Okay, and all this is it's a combination of buyers who are buying whatever this is. In this case, it's SPY. In order to buy, you need sellers. And when it comes to supply and demand, if you have a flood of buyers in the market, that's going to drive the price up because you have less supply because of tons of demand. You got a lot of demand, less supply. That's going to force the price to go up because people are going to buy it, and then more people want to buy it, so that people are going to move their price up, and then vice versa, sell-offs, you know. And when it comes to charting, you can get 50 people to look at this chart, and 50 people will draw different lines on the chart. It's all about interpretation. There's no right or wrong. There are some things that's more obvious than others, but at the end of the day, you could draw lines on here all day long, and the market's still going to do what it's going to do. Like, you cannot predict what price action comes over here to the right. Like nobody will never know what the market, or be able to predict, no matter how smart you are, you'll never be able to predict what the market's going to do to the right. You can only go by what the past have done to try to at least get an overall thesis or bias or sentiment on what you think the market's going to do. That's all it is. But in the day, you really just want to make sure you're not overpaying, you're coming in overpaying for things. Like SPY right now is 663.70. It doesn't make a lot of sense to take a ton of money and buy it at this level. This is all-time highs of SPY. And you might look at this chart and be like, well, it's just going to keep going to 800. And it very well might, but it might take 5 more years to get to 800. And it might do a huge pullback before it gets there, right? So you want to be able to like say with confidence that whatever you're considering to buy, you're getting a good price, right? And the only way you can really do that is you want to get visuals, technicals to say, I'm looking at this thing, and this is something based on what I'm looking at. This is what makes sense. So that's what you draw on your charts, and you could draw lots of channels, like vertical lines. So if you come in here and click on the various lines, you see there's tons of different things you could do. You could do horizontal lines, extension lines, vertical lines, up and downs. You could free draw things, extend things out, really whatever you want. Up and downs, parallels. So if you do like a horizontal line, you can do vertical. A trend line, so trend lines are popular. So if I click this, I can say, I want to draw a line, just click, and you can draw your trends, whatever you want to do. So I'm going to say a trend line from here to, I could do something like this. This is a trend line. Something like this. And you can see that it's on an upward trend. And I could do another one. I could say like, hold on, let me do another one. Click, and then I could say, and that is, when you look at that, you can say, okay, that's on a vertical trend, right? So that's a vertical trend. And you can put text on it. Click. If you right click on any of them and go to settings, you see you can add text. Sample vertical trend, and boom, you got a good chart. Another thing you can do, I can remove all my drawings. You can do horizontal lines. So this is my little shortcut bar. I can click this, and this is what I'm talking about as far as like um, support and resistance. So right now I can draw a line right here because this is all-time highs. But you wouldn't do that. You want to figure out a way. So if I put one here, you want to look at from a points in time where price action intersects to decide, right? So if I go here and start moving this down, you should be with your eyes be able to look and see from a horizontal standpoint, like where candles kind of hit and stop. So maybe like right there. And then you want to do maybe another line. So I might do another one. So I'll come in here and I just do shortcut key, which is Alt H. So I'm going to find another area. So maybe something like that. And then I might do another one. So I'm going to do Alt H. And that does another horizontal vertical. Maybe something like that. And then if I do another one, I can say something like this. And then it gets easier because of multiple intersections. So I can say something like, this is where like a lot highs. So something like this. Right? And then maybe I'll add another one. Maybe something like that. And then let's do another one. Like I said, there's no wrong answer, but some are more obvious than others. Because I sit here all day long and draw all these what's key levels in my mind, are what key levels of resistance and support. Because looking at this from top to bottom, this is support. I mean, this is resistance. This is support. This is resistance. This is support. They're the opposite of each other, right? So like in the channel, you see this is where it broke out and it's been going up ever since. And this is very helpful because if now you have like of all time drew lines, I can now zoom in. So like, show me the last 5 years. Show me the last year. You can see how these levels, they really support these levels. And you can see how the price action. And then the reason why you draw, because now you have like highlighted levels of support and resistance all the way down. And you can do this for anything. You can do it for anything. And this is essentially, this is charting. This is the most basic charting that you could ever do. Is you're just trying to represent support and resistance on anything. And then you can make decisions on what you want to do. So like for me watching this, I can say, all right, for the last 6 months, SPY did this. You can span it out, you zoom in. I can say, show me the last months of SPY, show me the last year. And you can see this is how it moves. Like the lowest in the last year was, the lowest point I see is back on April of this year. Was, you move my little indicator here. I can say the lowest point is 479. Apparently back in April, this was probably Liberation Day. SPY had dropped all the way down to 479. Right? Could it do it again? Absolutely. And like if I'm looking for a discount, I'd be like, wow. SPY at the lowest was 479. At the highest, 664. Like I would never, that tells me I would never buy in that range. Maybe it's somewhere in the middle, maybe 517. If it ever gets into 517, I would buy it. That's a good deal, right? Or let's say I do none of these. Let's say I nuke this out. Right, if you right click, go down to remove. You could get rid of all your joints. Another one I like to use is there's a statistical, hugely popular thing called Fibonacci, and they have like, for whatever reason, psychologically, these levels are 100% supported by um, everything mathematical. So if I was to come in here and add a Fibonacci retracement, which is if you look over here, it's under here, and you can look at the various aspects of it. I use the main one, just Fibonacci. When you use it, I will show you what that looks like. So if you basically pick any of the lowest points, you pick the lowest point, and from there you move to the any highest point, and that gives you Fibonacci. Click, and there you go. So now you can see the various levels of retracement for something. So when you got something that's going to the moon, you get a graphical zones of Fibonacci, and there's levels that are honored by Fibonacci levels, right? So, this right here shows me that, SPY with a pretty decent pullback, it could get back down to 520. Like on a real bad crash, no air quotes, crash, it could retrace back to 520. Be basing these levels. And you see how the level really, it showed right here as a support. This is support of SPY at 520. Like it could get back to that level for sure. And then you could combine this with your charting. So if I put a horizontal line, I could say something like maybe that, and then I might know do another one here. And I decided because candle, this one came down and hit support and bounced back up, so that gives me a good line. And then I might do another one here. This is where it hit it twice. And then another right here, so I'll put one right there maybe. And then sometimes it doesn't even make sense to go any lower. Like, what is the chances of it falling way back down to the 38% retracement, right? Like, that's insane. So, and if you look at the numbers, you'd be like, all right, I can see SPY coming back to 602. But if it gets really bad, it might fall back to 555, right? And then it might come back and hit it, fall all the way back down, boom, and then shoot back to the moon, right? So that's really, that's it. I mean, these are my favorite drawing tools. It comes down to these three. It would be horizontal lines, doing your horizontal lines, or doing Fibonacci retracement, just so you can get a good breakdown. I personally would not do like a 1 day chart. 1 day chart, 5 minute. People tend to do these type of charts if you're a scalper or a intraday trader. You would do things like this, and you can make these candles big if you get real close into the, really zoom in, really home into a chart. You can actually get it to where this looks like wow, it looks like tons of good data. But again, this is very misleading. You can see these 5-minute charts, these 3-minute charts. People trade this all the time. They scalp the markets. You can see support levels within a day of price action. And this is how scalpers do it. They get into these real tight charts, and they can identify, these colors show like extended hours or after hours trading, and these blue represents while it's open, right? This is while it's open. So these are the various like sessions they call it. When Asia comes online or Europe, the American hours, New York time. This is where things get hot. Like, so this dark blue is a normal trading day, and then these other colors Asia or something like that. So like you can get to charts where it's extremely tight. Give me a day of data. Um, and like I said, people who do scalping or intraday, they do stuff like this. I'm even guilty of trading some real tight ranges, but all that to say, when you draw your support and resistance lines, you need as much data as you can get. That's why I like all is great. All is great. Um, that's my go-to move. That's what I would do. Yeah, one very handy tip if your charts got out of whack, get too zoomed in on things, because you could move your chart around. You could change the scale by the more you drag, the more your charts kind of zoom in. You could hold your mouse and scroll it to the right. You said it squeezes things in, or you can bring it out. So the more you kind of drag and move, you could zoom in and see more bigger charts, bigger sticks, time frames. But if you want to snap it all back, if you hover over your price and hit the A, it will auto fit your screen. Like so, if you want all data, and then you tell it to auto fit, it will reset everything back till it fits it all on your screen. So no worries there. Set your levels. So again, let's have some fun with, let's say, something else like maybe like something a little less chatty like AT&T. So same thing here, and I will remove my lines. But this is AT&T. I can still show me data of all times. So this is what I like about it. You can really see something. This is not a very expensive stock, but you can still see how it moves. Like since the beginning of time, it was back in like 1989 is when the first started publicly trading on the market, right? So this gives you a real good support and resistance visual, but it helps to actually do it though. So if I draw this line, you click. I'm going to find the first. So if I move this, you can go to right here is where I'll probably draw the first one. Right there. Then I'll do another one. Then do another one. And the whole point you're trying to get points where either candles hit it and it looks like they get blocked, so boom, boom. Or you see where price action kind of fell down and it hit and kept going up. So maybe something like, and then you can grab and move it. So you move it up and down. So I can say, all right, where do you see a lot of candles intersecting? Their tops and bottoms, right? So I would say something like here, and then maybe another one there. Several candles like stop right around here, kind of start, and then maybe another one. And you can draw as many that you want or don't. Well, like I said, all this is doing is you see how the candles like hit it. No matter what they couldn't get up, or the opposite, keep coming down to it, hit it, boom, bounce up, bounce, boom. Like I could probably do another one. Something like that, and then you can zoom, you can stretch it out. Because like see, and this for me, when I see this type of action, this is all I call it overpriced, overvalued. So this overvalued. So like once it got shot to the moon here, like I don't trust these levels. These are all you're paying a premium to own AT&T. I would never buy it for any of these levels, these prices, right? And it also looks like this is going to eventually come and crash back down to support, which is highly possible. You see this peak right here? So this could easily fall and kind of hit, boom, hit here and stay. And bounce off this for years. And then eventually the sellers are going to want more correction. So it might fall back down to 19, and then it might fall back down to 17. But you need a lot of data to really see this. This is like times of the past. So you could do maybe another one. You see it loves this level. around right there. See? And then it looks more obvious when you zoom in. So if I say you can show me 5-year, you see how that looks right there? Boom. So now it looks real good. This is a good 5-year chart. And this shows you like levels that it honors based on the past. Like you can see how there's price action activity through here and through here. So it might retreat back to this level, come back down. Like for years it might trade between 17 and 19, or for years it might trade from 19 to 20. And then out of nowhere it shoots through the roof. But it's gonna come back. Or the company might have grown and be a fair price to where it might never come back down to 17. It might stay between 29 and 20 for years. Or it might stay between, because like there's a lot of activity here for a while. So, you know, it might define a level like right here. Like right that. It might pull back to $25, and then when it finally starts busting through, it's gonna probably fall. This is when like prices just fall. It might come down and hit this for a couple months, and then it might just fall back down here, and you know. So that's this, but you never know. There's no right or wrong to price action, but the past will show levels that people honor as far as what they're willing to sell it for or what they're willing to buy it for. And so support and resistance is key. And identifying through charting and the fair value, the fair discounted cash flow of a company, its intrinsic value. If you can figure that out, what those levels are, that can really help you know what is a fair price for something, right? So that's really all I wanted to show you when it comes to charting. I want you just to understand the amount of data it is, what each interval or candle represents as far as a day worth of data, a week worth, a month worth, an hour worth of data. When you pick what it is, that represents your candles. You see how much data that you want. And then as far as drawing of different tools, these are your price levels through horizontal lines. I don't do a lot of channels. Some people do. I know a lot of people like to draw channels. I'm not a big channel guy, more support resistance. So you'll only see my charts with those. I try to keep them clean. I don't do a lot of indicators. I could do a whole nother lesson on indicators. I will show you the two that I like to use. The only one that really matters is my pivots, highs and lows. This is a really good one because it will show, in addition to like you drawing support and resistance, this just shows very strong prices based on the amount of data that you have, which is why I love to do like all data. It shows you, you notice that there's no highs and lows here because it's just not enough data to prove that this data is, you know, strong support resistance. So that's why back here, because of the back and forth, it can determine these are good strong levels for highs and these are strong levels for lows, and so forth and so on. But all this price action, it's just not enough data to prove that these are good levels over here. So that's the one indicator I will show you. So you can also do like volume indicators. You can add where it shows like the volume per candle, which I'm not going to add that right now. And then I have another one called morning sessions, the sessions that I showed you earlier about the morning and the evening session, interim day, and then this right here can put dots on like supported levels as well. And I'll show you like for this time, like this is a strong support or strong resistance. But this indicator is not really that good unless it's just a day worth of data. If you do like a day, it gives you better support and resistance as far as the sessions go. Otherwise, it's not a very useful indicator. We have a lot of data. So, other than that, that's the biggest thing I want you to see is learning to understand charting, using support and resistance lines to make your determination of what strong price levels are so you can do your trading. And then you can use other tools like Morningstar to know what is a fair price for what you're trying to trade. All right. But other than that, tools have really cool things of alerts. So in addition to your levels, you see this little plus right here. This will actually add like alerts. So I can say, I want to be alerted through this this application if AT&T ever gets back to 2075. So you click and it gives you an option, add alert at this level, click, and then that will actually draw alerts. So if you look here, I got alerts. This, how you get to is over here, alerts, and this will show any alerts that you have. So I have quite a few. So I can't add more than, you do have limits. I have an essential account, so I can only do a certain amount, up to 20 or 30 or something like that. So it's not gonna let me do more. But yeah, you just use this tool, a little plus. And let's say let me get rid of one so I can show you. So let's say I get rid of my, this one. Okay, so let me delete. Okay, so let me add one. So if I go here and say at $24, you click, and you see it puts a little dot, 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 dot. That's special level. You can adjust it too. You can say, all right, I'm gonna move this down. And that's just a visual way to adjust, and then, oh yeah, then there's different types too. So you right click, edit. You can say if the price goes less than or greater than, alert me. So if I say letter less than, and you can by hand type it too, 22 every time, save. Then now you got alert. So if the price falls down for the next 3 months and eventually hits it and go below, you will get alert on your phone or on your browser or in the app, and then it'll log it too. It'll log it every time it hits it, depending on the type of alerts you have. So between alerts and your price levels, you can do some really good charting. Oh yeah, the other thing too that's really nice is if when you get your charts the way you want and you want to share them, you can click on this little snapshot button, hit click, and you can download it if you want to like send as an attachment on email, or you can do a copy link, which is nice because now this URL is available for the browser. So if you put that in the browser, other people can see the chart that you drew, which is real nice. All right, but for now, that's all I got as far as the basics of technical analysis or charts. And then stay tuned for more on more advanced techniques for technical analysis. But until next time, everybody, happy trading and good luck.